I am not qualified to give financial advice. I found this interesting stock. Everyone's talking about Crimson Desert. I go into the analysis of the fundamentals a bit later about like what's happening. So let's take a look at their chart. It's pretty interesting. A Korean chart. It's a Korean video game company. So the game came out on the 19th and it dumped. It dropped, lost 20% of its value, 30%. Gap down on the opening, down 27% on the opening. Gap pooped. Is it a poop and scoop, or is it going to continually go down? Because after 3 days being below the level, more reviews started coming in. So at first, people are expecting it to be like, the greatest game of all, one of the great games. And I guess people are saying it is a good game, but then like it came out and people were giving it bad reviews because I guess it takes like 8 hours to like start getting into it before it starts getting good. So it took people a couple days, but then some good reviews started coming out. People were like, oh, this actually is a really good game, which I can see like how some people would think that, the exploration and the environment is a pretty good game. But I mean, how long is it going to last? Because like the quests are kind of like brain dead, aren't they? It's just a bunch of pointless quests. The story's not that good. Bunch of cutscenes you can't skip. Like I'm into like gameplay, like Dark Souls kind of games, really good. But this is more like Witcher 3, I guess, which is like really good game, but more like narrative driven. But the narrative's like really bad apparently, or it's not like the story's not good. So what's going to happen? Is it going to keep going? So today it gapped up 7% and then sold off immediately. Well, it just opened like an hour ago. It's a Korean stock. So anyways, lots of volume coming in. Some RSI. Okay, well, let's take a look at the history of the stock. So what's this line up here? Like, why is this line up here? What are these order blocks? Yeah, the beginning of the year, I guess the hype, it was coming out or whatever. It went up like 40%. Stage 2 uptrend. Wedge pop. Up like 50% and then just sells off crazy like that, like it did here. Down 20% and then just completely recovers. Goes higher, but then it stops going higher. Hits that. So I drew a line here as like a top. I guess I could draw another line. So that's like the 50-day moving average. It went all the way down to the 200-day moving average, which is where the 30-week is also. The 30-week moving average is down here. And immediately recovered where this trend line is. So let's take a look what's going on. If we look back here further on the chart. So that trend line is here. We can see this is a previous high and another high. That's where it broke out. It broke out and went up a huge amount, like 70% from this breakout line. Went up like 60%. And now it lost all of that gain in like a couple days. One day it really just gapped down when the game came out. Sell the news, they say. Gap down. Now it's down to 34%. I'm not qualified to give financial advice, but it bounced here. So the good reviews started coming in down to the 30-week and the 200-day. Bounced 30%. What's going to happen next? I don't know. Is it going to hold that level, that breakout level? It's still like a 30% drop to consolidate. So here we go. Let's look at the history. So we got this opening. And about, turn the magnet off, it went up in a short amount of time. So it opened, like it became public, went up 40% in about 16 days, 16 VAR trading days. Continued going up 100%, doubled in value. Went up, then it stopped going up around here. So this is a significant area, which is about where we are now, up 200%. So we can just say, right here is a pretty significant level. So we'll add another line. And it tried to keep going, but it couldn't. It couldn't keep going. And it got rejected, kept getting rejected. And then it went into a downtrend. So this is like a stage 4 of the market cycle. This is a stage 3 right here. And we went on. Stage 3. And then it lost this rectangle. Darvish rectangle here. This range of 30%. It lost it. Now we're in stage 3. So this is stage 3 of the market cycle. And then below there is stage 4. So we're like in a serious downtrend here. Below the 30 week, below the 200 day. Down another 20% for years. Took years. Oh no, it took like 1 year, stuck here, and then it tried to recover. So now we're in stage 1. I would say this is like a stage 1 here. Particularly when it starts breaking out over here. This is when I would pay attention. So we're going down this trend line here. Starts breaking out, but it's just kind of like, it's not going to sustain, 30% here, loses 30%. So it's making this huge range that we can't seem to get out of. It's got to get out of this box. And then it does, eventually. So we can say the stage 2 uptrend starts around here. Right around here. This would be the stage 2. After it recovers out of this box. It's funny, it's years later and we're about 10% higher than we were way back then. So if you can see, we got a huge bump, another 40%, then just sells off, bam, back to that significant level. It's able to hold it above the 30 week, regains the 50 day, and we're going. So the stage 2 uptrend. There's market cycles within market cycles, but the macro is a stage 2 uptrend. It goes up 30%, loses its value again, down to the 30 week. Oh, that kind of reminds me of something, right? The 30 week? Well, let's continue. It goes up, and it goes on a tear. So you'll go spike up, and it'll lose a value, spike up. 100%. Can't go higher than that, though. And it loses it, and now we're stage 3. This is stage 3 uptrend, double top, which is obvious after the fact, and now it's breaking down. It's fallen, and now it goes back to that significant level again, and it reacts. It reacts here for, say, about 60 days. Then it looks like it's about to recover, but that's a huge drop. It just lost. It lost like half its value. So that's just like a bear market rally, which sells off until we get here. And draw a trend line here and be like, well, I'm not touching it until it starts consolidating on this side of the line, which it does, you could have bought here and then you'd be down 15%. Stopped out or whatever, but yeah, triple bottom, it starts going higher for quadruple bottom, I don't know. And it goes up, but then it just can't sustain the rally. 20%, that's not bad, good 20%. But yeah, it can't hold it, and it's going. It's just some video game company, Korea video game company, and it goes down, but they have like a really successful MMO, Black Desert Online, so it's going down. I've never played it, by the way, but I hear it's really good. Up 50% out of this line. Yeah, it goes here. So I'm like, yeah, let's draw another line here, Seems like a good spot. So I'm not touching it until it starts breaking out of here, which it does, but it's a fake out. Gaps down 20% into the order, creates the order block. Now it's like, well, let's just see what happens. And there we go. Game's coming out this year. January starts shooting up. 65%. 65% from January 22nd. Yeah. So in a week, in 8 days, in like 10 days, it goes up 40%. Then it, loses its value, consolidates, loses the 10 day, loses the 20 day, but it's still holding the 50 day above the 200 day. And then look, next part of the up thrust. So in about 50 days, it increased by 60%, and then one day it loses 26% of its value, down 30% in like a week. But then there's some good reviews come out, goes up 30%, bounces off the 30 week, the 200 day, and look where we are now. Well, the market just opened, so let's look at the 15-minute. Yeah, so it gapped up 8% on the market open. And it's a crap. It's called a gap and crap. You know? But hey, maybe all those bad reviews are just going to turn out to be some kind of poop and scoop. Which technically it was. If you bought the 30-day, I'm not qualified to give financial advice. The 30-day up 30% in like a day, 2 days. So, all right, well, that's my analysis for Pearl Abyss Corp. Because everyone's talking about Crimson Desert. So yeah, I'm not qualified to give financial advice. It's literally my name. Thank you for tuning in. And if you have any suggestions, leave them in the comments for some stocks I can examine. And that's it for now. Goodbye. In most tech stocks, the institutions, the BlackRocks and Vanguards of the world set the floor, but Pearl Abyss is different. Institutional ownership here is a rounding error at less than 5%. The real power is the 51.7% held by the general public. When you look at Pearl Abyss chart, you aren't looking at a corporate strategy. You're looking at $2.4 billion psychological experiment. This is a stock owned by the people who actually play the games. And that changes everything about how it trades. Look at the chaos of March 19th when the Crimson Desert reviews hit a 78. The tiny sliver of institutional money panicked. They dumped 258,000 shares in a single session, triggering 10 different volatility interruptions. But here's the kicker. While the pros were running for the exit, retail traders were net buyers of $52 billion. The people holding 51% of the company looked at the same 78 Metascore and said, I'm buying the dip. This created a massive tug of war that the institutions simply couldn't win because they didn't have enough ammo to keep the price down. Because retail dominates the float, the narrative is the most important technical indicator. In a normal stock, you track the P/E ratio. In Pearl Abyss, you track the Steam Recent Reviews tab. When the game launched with mixed reviews due to clunky controls and undisclosed AI art, the stock stayed suppressed. But as the patches rolled out and the score moved to mostly positive, the retail sentiment shifted. That 27% surge on March 25th wasn't because of a new earnings report. It was because the 51% collectively decided the game was a hit. It's a decentralized hedge fund where the investors are also the quality assurance team, the insider alignment. The only thing keeping this retail-driven volatility in check is the founder, Kim Dae-il. He still holds 38% of the shares. This means nearly 90% of the company is held by people with a direct emotional stake in the product, either the man who built it or the fans who play it. For a YouTube creator or a technical trader, this is the ultimate momentum play. There is no institutional ceiling to stop a rally, but there's no institutional floor to catch a fall. You are trading alongside 30 million other individuals. If they like the next patch, we moon. If they hate it, we crater. Welcome to the 51% rule. I am not qualified to give financial advice. We're going to look here through the fundamentals of the Pearl Abyss Corp because everyone's talking about Crimson Desert. I haven't played the game yet. Maybe I'll pick it up on sale someday, but I don't know. I mean, I saw some of the reviews that were like, I don't know. Some of them were like really good looking, but then like as the game went further and further on, it's like the quests are just so like brain dead and pointless. It looks like, I don't know. I'm more into like gameplay kind of games, but you know, the exploration in the world looks really cool, but I mean, if it goes 50% off, maybe I'll buy it. I don't know. But anyways, Pearl Abyss is currently in the middle of a high-stakes make-or-break moment. If you're looking at their chart, you likely noticed a massive gap down or extreme volatility recently. Here's the breakdown of how they got here and why the stock is behaving so erratically. So the company history, the Black Desert Foundation. It was founded in 2010 by Kim Dae-il. Pearl Abyss quickly became a powerhouse in the gaming industry by doing something most studios avoid. They built their own proprietary engine, Black Space Engine, rather than using Unreal or Unity. The Black Desert era from 2014 to present, their flagship title, Black Desert Online, BDO, redefined MMORPG graphics and combat. It has generated over $2.2 billion in lifetime revenue and boasts over 55 million registered users. Vertical integration. Unlike many developers, Pearl Abyss eventually took over its own publishing rights globally, giving them higher margins but also putting the full financial risk of new titles squarely on their shoulders. In 2018, they acquired CCP Games, the creators of EVE Online, for $425 million, signaling their intent to dominate the infinite-scale persistent world genre. The current narrative, the Crimson Gamble. The buzz you're hearing about Crimson Desert is because the game officially launched on March 19th, 2026, after nearly 7 years of development and a budget exceeding 200 billion won, $130 million. The current narrative is a tug-of-war between commercial success and critical skepticism. The financial sell the news event. Despite the hype, Pearl Abyss's stock plunged nearly 30% on launch day. Expectation versus reality. Institutional investors were reportedly pricing in a masterpiece, a Metacritic score of 85/90 plus. When the game debuted with a Metascore of 78, shareholders dumped the stock, fearing it wouldn't have the long-term legs of Black Desert. Commercial victory. Ironically, the game is a hit. It sold 2 million copies in 24 hours and reached 3 million within 5 days. This has created a massive divergence between the crashing stock price and the actual revenue coming in. The controversies. The AI oversight. The company had to issue an apology shortly after launch for the unintentional inclusion of generative AI assets that weren't properly disclosed, leading to friction with the Valve Steam policies. Technical exclusivity. A minor firestorm erupted when it was revealed that the game did not support Intel Arc GPUs at launch, with the developer bluntly telling those users to seek refunds. Internal rumors. Unverified reports from employees suggest development was chaotic, with the story being finalized only months before release, which critics noted led to a disjointed narrative. So what's next for the chart? Market is now watching to see if Crimson Desert can sustain its player base or if it's a one-and-done single-player experience. Pearl Abyss is also working on Doki 5, a creature collection game, and Plan 8, an exosuit shooter, but Crimson Desert's long-term tale will likely dictate the stock's recovery. Nothing you hear or see is to be considered financial advice. I am not qualified to give financial advice. I'm just looking at the charts and the narratives of some interesting stocks that I come across. Thank you. Have a good day, night. Have a good life. I hope. Wish you the best. Like and subscribe for more content like this. I am not qualified to give financial advice. I'm not qualified to give financial advice. The $133 million gamble. Why Wall Street was wrong about Pearl Abyss. The crash. What happens when the smart money gets it completely wrong? On March 19th, Pearl Abyss stock, the studio behind Black Desert, suffered a catastrophic 30% collapse in a single morning. Why? Because critics gave their new $133 million blockbuster Crimson Desert a 78 Metascore. To institutional investors, a 78 is a death sentence. They expected a 90, they got generally favorable, and they hit the panic button. In 48 hours, over $1 billion in market cap vanished. The twist. The whoopsie moment. But while the analysts at firms like Samsung Securities were warning about slow growth cycle, the actual players were voting with their wallets. Just 5 days after launch, Pearl Abyss dropped a bombshell. 3 million copies sold. For context, that outperforms recent hits from major studios and nearly covers their 200 billion won development cost in less than a week. The result? A massive 27% V-shaped recovery today. March 25th. This is what we call a short squeeze on narrative. The institutions sold the reviews, but the retail traders bought the revenue. AI and broken tech. It wasn't a clean victory, though. The launch was messy. Pearl Abyss had to issue a formal apology for unintentionally including generative AI assets that weren't disclosed on Steam. Combine that with a weird technical snub where they told Intel GPU users to just get a refund, and you have a recipe for the mixed user reviews we're seeing on Valve's platform. But look at the balance sheet. With 350 billion won in cash and a debt-to-equity ratio of just 7%, this isn't a company on the ropes. They are using their proprietary Blackspace engine to build a recursive ecosystem. They aren't just making a game, they are building a tech stack that they own 100%. What's next for the chart? So, where is the top? NH Investment just raised their target to 51,000 won, but others are staying bearish at 37,000 won. We are currently trading right in the middle of a war zone. Is this a sell the news trap, or are we watching the birth of a new prestige studio? If Crimson Desert can sustain this momentum through DLC, the institutions will be forced to chase the price back up. Keep your eyes on the 200-day EMA. If we hold this bounce, the whoopsie moment might just become the rally of the year. If you are looking for excitement in the Pearl Abyss February earnings call, you are in the wrong place. CFO Cho Mi-young opened the session with a figure that essentially summarized the last 7 years of the company's life, a 4.8 billion won operating loss for the full year 2025. In corporate speak, that wasn't a failure, it was an investment phase. In reality, it was the sound of a company holding its breath until March 19th. Revenue was up 6.8%, but when your development costs for a single title hit 200 billion won, up 6% is just background noise. The proprietary problem. The most deadpan moment of the call came when analysts asked why Crimson Desert took so long. The answer: the Blackspace engine. Pearl Abyss isn't just a game studio. They've spent the last half-decade acting like a software infrastructure firm. They told investors that building their own engine was a recursive necessity, meaning they spent the money now so they don't have to pay Epic Games a 5% royalty later. It's a classic move. Spend $133 million to save $5 million in royalties. The market's reaction to this logic was a long, sustained silence, followed by a slow bleed in the share price leading up to launch. The EVE cushion and the Doki 5 horizon. The only part of the call that wasn't bleeding was Iceland. CCP Games, the creators of EVE Online, reported their best quarter since 2020, while the Korean side of the business was burning cash on high-fidelity grass textures for Crimson Desert. The EVE players were quietly funding the operation through the Catalyst expansion. When asked about Doki 5, the creature collector everyone actually wants to play, the management gave the most Pearl Abyss answer possible. It will be ready about 2 years after Crimson Desert. That puts us in 2028. If you're a shareholder, that's not a release date, that's a lifestyle commitment. The conclusion: break even. The final takeaway from the call was the break-even point. Analysts estimated the company needed to sell 2.5 million copies of Crimson Desert just to stop the bleeding. As of this morning, they've hit 3 million, so the operating loss era is officially over. But the expectation era has just begun. Management ended the call by stating they are monitoring market demand for multiplayer. Translated from CEO speak: we'll add it if the stock drops again. I am not qualified to give financial advice. Stick around for the next video where we actually look at the chart and see if the V recovery has any actual legs, or if we're just bouncing on a dead cat. Or maybe I edit it in before this. We'll see what happens when I edit it. I am not qualified to give financial advice.